And yet there are days when you wake up and oil prices jump dramatically and decline dramatically. That's just the nature of what it means to have a scarce asset where there can be supply shocks and otherwise deliverables that are possible. And Bitcoin is exactly the same thing. Pleasantly surprised by how well Bitcoin's been performing recently in the summer.
Why is that?
Usually the summer tends to be a pretty boring period for crypto. If you look at the studies of Bitcoin's outperformance, it tends to be in the Q4, Q1 timeframe. And the Q2 to Q3 timeframe is pretty lackluster. I do think there's some seasonality embedded in why Bitcoin behaves this way, but
the banking industry is about to face a storm that has been brewing for many years. The system is now on the verge of collapse due to money printing and growing debt. And now, in ways we have never seen before, the dollar's hegemony is being put to the test. For years, there was a silent circling of questions regarding stability. The noise is louder now, though. Wall Street isn't only keeping an eye on Bitcoin anymore. It is welcoming it wholeheartedly, and it has become evident this summer. Bitcoin is undergoing a significant change. The reality is more nuanced, even while headlines hail new heights and booming interest. There is a risky question hidden beneath the joy. Do we see truly sustainable growth, or is this just another house of cards that will topple under pressure? Businesses aren't just purchasing Bitcoin. Around it, they are developing financial products, the kind that has the capacity to bring about both chaos and power. It feels like history is being made right now, but there is danger in history as well. Jeff Park, a cryptocurrency specialist, describes the current situation and its significance. He cites two significant changes that have already altered the market. First, Wall Street may now use real Bitcoin in a more convenient and affordable way to create ETF shares, as the SEC authorized Bitcoin ETFs to permit initial creations and redemptions. Second, a huge jump that unleashes significant trading power was made when the option limitations associated with Bitcoin ETFs were increased from 25,000 to 250,000 contracts. These actions have paved the path for a new generation of structured products, enabling Wall Street to influence Bitcoin in the same manner that it has influenced commodities and stocks. Park cautions that this is a watershed moment and that Bitcoin is now performing on the greatest stage on Wall Street. To gain further understanding, let's now view snippets from Jeff Park's shocking interview. Remember to subscribe, like, and turn on notifications for more in-depth material. We appreciate your return visit. Take in the remainder of the video.
Bitcoin is the scarcest, hardest asset known to man, and it is the social covenant that I think will supersede the dollar as we've known it in a way that hopefully in the future will be synergistic for both American exceptionalism. It will be inevitable that governments will buy Bitcoin on their balance sheet. This is something I feel very strongly, but I do also think we have to be patient about it, where it is not likely a rogue decision. Sure. So for the latest, I've definitely been following what's been happening in DC in the construct of the Genius Act, the Clarity Act, all the AML KYC requirements around those constructs of crypto going mainstream. I think it's a huge moment, and we are now seeing the floodgate having opened where a bunch of stablecoin related news are coming out. I think it was yesterday that Interactive Brokers announced that they're going to have their own stablecoin. This is in addition to a slew of not just financial services, but even consumer-facing companies like the Walmarts and Amazon of the world who are exploring the utility of stablecoin as a payment mechanism. I think that is going to be a multi-generational opportunity to come. So that's really exciting. But in our domain and our lane of crypto equities, there's also been a lot of interesting things going on with the ETFs as well. So very recently, for the first time, the SEC has allowed the ability for APs to permit in-kind redeems and creations, which has always been a stickler point from the very beginning of the Bitcoin ETF journey since 2013. And in the event of the ETFs having launched, one of the concessions that was made was that only cash creates and redeems were permissible. And now we actually have the ability to natively contribute Bitcoin into the creation and redemption of these ETFs via the APs, which is an incredible win for the end consumer because it ultimately lowers the cost of trading, lowers the friction, and lowers the count of intermediation that necessitates the production of these ETFs. Yeah, the primary constraint historically has been that the APs themselves were not really allowed to traffic in holding crypto assets, because there was no regulatory framework for those entities to traffic in providing liquidity for crypto assets themselves. So one of the workarounds was to actually have the APs deliver the cash to the issuers, which don't have the provisioned role of being an authorized participant, and let the issuers actually go to market and then buy the Bitcoin themselves and deliver it back to the vehicle through the trust. So it wasn't so much a tax constraint, as ETFs are very tax efficient in the way that they're already permitted to kind of allow assets to flow without carrying the tax characteristics outside of the vehicle. But it was really more of a logistical maneuvering in which the APs themselves were just not allowed to buy Bitcoin. That's the other big update. Yes. So BlackRock has filed with NASDAQ and the SEC for a long time now, or almost a year, for which the open interest limit on Bitcoin ETF options were constrained at 25,000 lots upon its admission. And 25,000 is not a lot. And actually, if I recall correctly, even in the first week of those ETFs trading, they hit the position limits. In a way, there were some advantages to having that to give fairness to other ETF issuers. So for example, if I wanted to put on a position with IBIT, BlackRock's Bitcoin ETF, but the position limit was hit, maybe you would choose Fidelity or the Bitwise ETF or others where the option chain does exist for those as well. And there is a vibrant ecosystem of arbitrage then that is possible between option chains across the same underlying holding, which is Bitcoin. But it's also a source of friction for investors who want to come in with big size. And so for a while, Deribit, I think, had maintained a pretty steady hold in being the predominant source of liquidity for crypto options. And over time, IBIT has made a serious dent in capturing a big chunk of that market share, both in open interest and across trading volume. And now what has happened is because the SEC has allowed the limit to go from 25,000 to 10 times that, which is 250,000, you can expect there to be a big gain of trading volume and notional interest that is coming mainstream to Wall Street, which is a big deal. The other part that was less public, but embedded within the same language, was they approved flex options as well for Bitcoin ETFs, which historically did not exist. And for those who are not familiar with what flex options are the backbone of structured products. So what flex options permit is the chance for a trader to define some of the parameters of the option contract specifications when a custom solution. So they can pick a custom strike. So rather than trading, a fixed dollar strike, let's say the strategy stock at 400 or 405, maybe I specifically want to trade the 401.67. You can do that now. Wow. You can also set custom expiration. So instead of trading on the weekly Fridays, maybe you want one that trades for an expiry on Tuesday or right before earnings or right after earnings. And you can now discreetly set those terms as well. So these are important because a lot of the financial innovation that happens on structured products requires a little bit of that ability for fine-tuning the definitive outcome of those products from a client perspective. For example, when a client buys a structured product, they're not necessarily thinking about hard stock prices and thinking about their payoffs. They're usually thinking about percentage terms. So they'll say, I want to make 10% of something or 15% of something, which equates to these weird now decimal strikes like 410.67. And they usually have an idea of saying, I want a 1-year trade, not one that expires, at a very specific date that doesn't exactly tie up to that 1 year. So these things are important. And I've always believed that the structured products business is ultimately going to be one of the biggest businesses for Wall Street, because that whole business is about monetizing volatility and giving different investors a chance to have different risk preference. And this permits that tooling now in a way that hasn't been done before.
Jeff Park thinks this is just the beginning, and he bases his faith in mechanics and statistics rather than vacuous rhetoric. He observes both a top-down and a bottom-up alignment of the market. Generally speaking, he cites anticipated interest rate reductions, which invariably encourage investors to pursue riskier investments. At the heart of that movement, Bitcoin is poised to draw in new customers. Park is more excited by what he refers to as bottom-up strength. He discloses that over $90 billion has already been set aside for Bitcoin and cryptocurrency investments this year, with an astounding half of that amount occurring in June alone. Treasury organizations and businesses oversee these funds, and their role is straightforward. Regardless of the cost, they have to purchase Bitcoin. This type of capital is not motivated by hesitation or fear. It is motivated by a mandate. For this reason, according to Park, Bitcoin is moving toward a phase of price inelastic demand. in which consumers continue to purchase despite fluctuations in the market. He also addresses concerns about paper Bitcoin, where detractors caution about financial items creating a fake supply. Park sees this conflict between believers and doubters as a strength since tension leads to big surges when markets shift in one direction. According to him, businesses that turn conviction into long-term growth by making actual profits and reinvesting those revenues back into Bitcoin will be the ones bringing about the real innovation. Let's check other interview snippets.
It's a great question. I think over time, what we'll see is that the general range of Bitcoin's volatility is probably going to be more constrained, meaning that the fat tail events are probably less likely day to day. At the same time, I don't think it means that they'll go away, which is the reality that volatility can be measured in a lot of different ways. On one hand, the most classical definition is measuring the standard deviation over a 30-day rolling period, which shows you what a normal distribution of a stock movement could look like. But volatility can also mean something beyond that to a second order effect of like a jump risk. So, having a volatile stock for the sake of daily volatility is different than something that's not volatile for a while and then one day moves 100%. That would also be called volatile. It just has a different quantitative characteristic to it. So my view is that Bitcoin will always have big tail risk both to the left and to the right of the curve, mainly because that's how commodities trade. This is the big win, of course, in Bitcoin being defined as a commodity and not a security. And in that sense, think about oil, for example. Oil is one of the most liquid commodities on Earth. And yet there are days when you wake up and oil prices jump dramatically and decline dramatically. That's just the nature of what it means to have a scarce asset where there can be supply shocks and otherwise deliverables that are possible. And Bitcoin is exactly the same thing. Pleasantly surprised by how well Bitcoin's been performing recently in the summer.
Why is that?
Usually the summer tends to be a pretty boring period for crypto. If you look at the studies of Bitcoin's outperformance, it tends to be in the Q4, Q1 timeframe. And the Q2 to Q3 timeframe is pretty lackluster. I do think there's some seasonality embedded in why Bitcoin behaves this way, but the truth is that this summer, it's been explosively dominated by crypto news. We just mentioned the stablecoin legislation having been an event during the summer in a way that really is somewhat historic.
Yeah.
And on top of that, this particular administration just has so much agenda to get through before the next election cycle would take away some of the news source. And so the urgency and the rush to get things done was really front-loaded into the summer. And I think that has created some upward movement for the stock and Bitcoin. But at the same time, we're at very low historic realized and implied volatility. Implied volatility and realized volatility are both kind of in the high 30s these days. Those are half of the Netflixes and the Nvidias of the world. It's actually sometimes been observed that gold had a higher volatility than Bitcoin in the past 2 months as well. So even though it's been muted, the price has either stayed consistent or kind of gone up in a range-bound way. And the reason it's surprising to me is because usually when Bitcoin hasn't had volatility, it tends to creep down. Because Bitcoin is a lot like your attention asset. People don't pay attention to it, so the volatility goes down and the price goes down.
Yeah.
And then once people start paying attention, volatility and price tend to be correlated together on the upward. What we're observing this summer is actually a divergence. Volatility is going down, but Bitcoin is still teetering on the edge of hitting 120 again and potentially higher into Q4. So that's been remarkable to see. I think it speaks to the fact that there is a floor and that institutional adoption is here, for which we've seen consistent demand for Bitcoin ETFs. This summer, we had the second highest source of flows in its history since inception in a way that isn't something you would associate with a summer cycle.
Okay.
So I think there's a lot to be excited about.
Park foresee a time when even governments will be forced to keep Bitcoin when he looks to the future. Just a few years ago, the concept of companies putting Bitcoin on their balance sheets seemed as radical as it does now. Park clarifies that such a measure will require congressional approval rather than swift executive action, since only then will it have long-term authority. Additionally, he emphasizes that in order to prevent financial instability and preserve confidence in the global economy, such a choice would necessitate international collaboration, especially with allies like Japan. Nonetheless, the hesitancy is genuine for the average person observing from the sidelines. Anyone accustomed to the safeguards of banks finds Bitcoin frightening and its irreversible transaction method harsh. Park contends that institutional items are essential, since he is aware of this. ETFs eliminate the anxiety associated with managing Bitcoin on one's own by providing a secure, recognizable gateway into the cryptocurrency. He acknowledges that his own path began with uncertainty. He became aware of the weakness of conventional finance during the 2008 financial crisis, which made Bitcoin's position as a limited, decentralized alternative clear. Park's message is one of hope and caution. According to him, Bitcoin's basis has never been more solid. He is aware that the future is uncertain, though. A global system built on limitless credit and liquidity won't cede its hegemony in peace. He views Bitcoin as the best hedge because of this. It is more than a simple investment. It serves as defense against the system. The regulations changed in a new era this summer. Institutions prepared to receive billions of dollars in cash, and they equipped themselves with potent new instruments. The repercussions won't be little. Bitcoin is currently experiencing hyperfinancialization, where it ceases to be merely an outsider's wager and turns into a structured, institutionalized asset. That is the real turning point for Park. Currently, Bitcoin is not outside the gates. It has made its way into the main hall of Wall Street. The question now isn't whether Bitcoin will expand, but rather how much of that growth will be genuine and how much will be based on flimsy foundations. The opportunity of a lifetime may be unfolding for those who are attentively observing, but the stakes are the biggest we have ever seen in this market. We appreciate your time, and please remember to like and subscribe.